November 5th, 2024. Today we ended up getting a bull trend from the open, and then we went sideways for 15 to 20 bars and had a small buy to close finish. Generally, when you have a bull trend from the open, there's a slightly increased chance that you get some sort of buy the close finish. I think by a 10 to 15%, something like that. Increased chance that you get a buy the close, sell the close finish, or something along those lines. On a bull trend day, buy the close, bear trend day, sell the close, obviously. Bar one, a bull bar closing near its high. It's good for the bulls. It's a breakout above yesterday's trading range. So you can see we had a trading range from bars basically, 37 or 38 all the way through the end of the day. And we broke out above that on bar one, and we ended up keeping the gap open. Oops, let me just remove that drawing. Okay. We ended up keeping that gap open the entire day. So I thought the fact that this was a trading range and we got a breakout above it on bar one was rather important. Bar two, consecutive bull bars, good for the bulls, increased chance that we go higher. With these bars, you look at the past couple of days and then you look at the size of bars one and two. There's a pretty good or decently increased chance that we go at least a little bit higher, and I would say a 40% chance, 30% chance that we've seen the low of the day because of how large of a surprise bars one and two are. Bar three, a pullback from one and two, but realistically, you know that one and two are strong enough that we're going to get a second leg sideways stop. So it's not really um, as likely that we get. One second. So it's not really that likely that we go too much lower. Most likely, what's going to end up happening is we're going to find buyers somewhere down here. And you can see bulls by the close of three, not letting it go below four because three is just a pullback. And the reality is there's buyers below three if we get there. So some bulls are eager to establish a position at the market and try to catch the second leg from one and two. And they'll do that by buying the close of three. Four, another bull bar, but a large tail on the top. Still a good looking bull bar though. I think we're going higher. Five consecutive bull bars, 4 or 5. So I'd imagine we're going higher. Six, three straight bull bars, 4, 5, 6. Again, really good for the bulls. Probably going at least a little bit higher. And what do you notice? We have open gaps, right? We have an open gap here. Then we have an open gap here with the 4 high and the 6 low, right? So you have the first open gap here, a second open gap here. We actually also had an open gap with the 7 high and the 9 low. So this gap never closed. And the fact that bulls were able to keep that open is really important. So we had 2 open gaps on the close of bar 6. You don't know what the pullback's going to look like. So if in theory, the gap is this 5 high and, whatever, you're on bar 7, it's the 7 low, you're on bar 8, it's the 8 low. And then you get bar 9, and you can see it stays open by a tick, but it's really just important that the gap stayed open. 8, an inside bar. The bears are hoping it's some sort of low too, but the reality is it's a tight bull channel. We have 8 straight bars, without trading below prior bars. So there's going to be buyers below bar 8 the first time we go below there. So expect buyers below 8 during 9. 9, a bear bar, but a large tail on the bottom. So obviously disappointing if you're a bear who was buying for any reason, or a bear who was selling for any reason. Any bear taking that sell is probably going to be really quick to get out on 9. 10, an inside bar, a bull bar, but a tail on the top and bottom. So not the best looking high one that you could have bought. 11, another bull bar, but a large tail on the top. Probably sellers above, scaling it higher. Or sorry, not a tail on the top of 11. I meant to say closing at a new high, but possibly a third leg up is what I meant to say. 1, 2, first leg, pullback 3, 4, 5, 6, 7, second leg, pullback 8, 9. And then 10, 11 is the third leg up. The magnets above, potentially 5,800, something like that, but probably initially at least sellers above the high one. You know that high ones generally lead to deeper corrections and then trend resumption. So it's possible we have to get a deeper correction before we do get trend resumption. 12, a bear close, but probably buyers not too far below, scaling in lower. 13, an inside bar, a bull bar closing on its high, good for the bulls. We're probably getting it back to at least the bar 11 close. I say the bar 11 close because it's the highest bull close so far. 14, another bull bar. It's consecutive bull bars, not quite closing at a new high. 15, another bull bar closing at the new high. It's trying to break out above the parabolic wedge, but it's really not all that good. You could argue the parabolic wedge was 1, pullback 2, pullback 3, but it also might just be a channel 1, 2, 3. So somewhat expecting sellers up in this area. 17, a bear bar. So trading again, we have these gaps open, right? The gaps are a really important thing to continue to pay attention to. But 17, a bear bar, a large tail at the bottom. You know the buy. There's going to be buyers at the moving average the first time we get there. 18 consecutive bear bars, but a large tail on 17 and a large tail on 18. Probably buyers below, scaling in lower. 19, a bull bar. It's a double bottom, higher low double bottom with 9. In general, maybe 40% chance we get a breakout above the neckline. 16, and a measured move up of some kind, which we did end up getting today. 20, another bull bar, so consecutive bull closes. Good for the bulls. Any bears sold the close of 18, hoping 19 was going to collapse below the moving average, is disappointed with how 19 formed and probably buying back their shorts, and that's what's causing 20. Consecutive bull bars, 19, 20. We're probably getting back to around the bar 16 close. 21, an inside bar, a high one for the bulls, probably buyers above, sellers below. 22, another inside bar, so II, 21, 22. The important thing to pay attention to when you're looking at bar 22, right? What you should be paying attention to is the fact that we have an open gap here, an open gap here, and an open gap here, and we haven't gone below the moving average yet today. Those are all the qualifications of some sort of bull trend day. So when you look back at the end of the day, you know it doesn't look like it in real time. It looks like it's going to reverse in any moment, but the reality is a lot of the times when trends don't look like they're going to be trends, they end up becoming trends. So a lot of the days where you're expecting the market not to trend are the days, or where it doesn't look like an obvious trend are the days where it becomes a trend. 23, a bull bar, good for the bulls, but consecutive inside bars are bear closes, so not necessarily as high probability as it could be. 24, another bear bar, or a bull bar, or bear bar, sorry. 23 is a bull bar, 24 is a bear bar, testing back to the 21-22 close. The reason why it's the 21-22 close, that would be an important magnet, is because there were consecutive inside bars, and inside bars are triangles on lower time frames, and so you have to be expecting that if we get a test back into this area, probably buyers. 25, a bull bar, getting to a new high, the 16 high, so breaking above and closing above on 25. Possibly 3 legs up, 1 pullback, 2 pullback, 3, but who cares? It's a bull trend day. We don't, you shouldn't really care about wedges on bull trend days. 26, an inside bar, a high one for the bulls. Probably buyers not too far below, probably sellers not too far above. 27, buyers below 26, bad low one short. No one wants to sell below this bear bar. Yeah, it's 3 pushes up, maybe some sort of wedge, but massive tail. We're always in long. 28, a bull bar, big tail on the bottom or on the top, probably sellers not too far above, buyers not too far below. 29, an inside bar, a high one buy for the bulls. 30, trades above 25, but ends up failing. However, 3 straight bull bars, still odds are we're probably going higher. Buyers below 30 during 31. Consecutive doji bars. And then 30, 32, another bull bar, probably sellers not too far above 31, scaling in. But again, look what we've been doing. We've been in a bull trend pretty much the entire day so far. And when you're in this area, there's a couple different things that can happen. This is one of the. I'm speeding, going through this review a little quicker. I want to do some other sort of studying tonight, not necessarily making these video reviews tonight. These video reviews are good, but they are mostly price action studying, and I want to be studying more of the math behind trading right now. So that's what I've been spending my time doing when I have been studying. I'll admit, I don't think I've been as disciplined about my studying over the past, I would say, month and a half as I could be. So I think I should just, mentally get back to that. But a couple of different things can happen. You can either get a trend until around bar 50, and somewhere between bar 50 and 60, the market will start to do this again. You get kind of a breakaway for 5 or 6 bars, and it's basically the end of the trend. And then you usually, when that happens, after you get that sort of breakaway from bars 50 to 60, somewhere in that range, you get a really big bear bar, and then the market goes sideways for the remainder of the day. Here, around bar 42, you can see we started to go sideways. And considering the fact, if you think about a 15-minute chart, it's going to get a second leg up, right? So even when we start doing this, if you were trading this chart, do you think this? Let's go even more. Let's look at a 30-minute chart. So it'll even illustrate the point even better. Yeah, so when we start to do this, you get bars 48 and 49. Or sorry, this bar and the bar that says 49. Do you think this is going to be enough to undo this? Not really. It's probably just a minor reversal, and you can see it ended up being a 2-legged correction, but it was minor. So if you really zoom out, and pay less attention to the bars and more attention to the context, you can see it was one pullback, two legs down, and then a reversal back up. So something that traders get stuck doing a lot is they end up, taking trades in spots where they're really paying attention to the minute context and the small context and not paying as much attention to the larger context. And so people will get too wrapped up in what's going on in a particular bar or the one or two bars before it and be a lot less concerned with the overall price action, which is what you should actually be watching. So you have to find a way to kind of rectify that. And that's what I've been mentioning with the leg one, leg two thing is it helps sit through sit through deep pullbacks and pay attention to larger context, which is what I think is a really important thing to do. So, we get a pullback here and, sure, it's a little bit deep and probably a little bit scary if you're newer, but the reality is, it's a minor reversal. That, there's going to be buyers somewhere in here. This isn't really a great area to sell. You're going to get another leg up. So you could buy at the market or buy for any reason, probably stop below the last major high or low, which would be the bar 19 low. And surprise, surprise, I bet it's around a 50% pullback. Yeah. So in this general area, the 50% pullback is where the bulls kept buying between the last leg of the major low in this area. So it's really not all that surprising when you get stuff like that. Maybe we got a big leg one, leg two on the day. Not quite. Okay. But the point to keep in mind is when we start to go sideways, you shouldn't really be looking to sell. If we were going to sell off, 64, 65, it would become obvious. 66 would look like 65 and 67 would look that way as well. And you start to get a really large sell-off. So we're really not getting that. And so to me, this area is really just a buy zone. You should really just be looking to buy as we're getting this pullback, expecting that we reach a new high. Because the reality is when you get a gap bar, odds are you're going to get a new high. All right, I believe that's really going to be it for this video. I'm cutting this one a little bit short. I've just been tired. I've been studying a lot for a lot of years, so I've just felt really tired, to be honest, with studying over the past, I don't know, like 3 or 4 months, really. It's probably been going on for closer to 6 or 7 months, and I've still been studying a lot, but I just haven't been as invigorated about it as I have been in the past. So, especially, these videos, I do like making them, and I really appreciate all the views and stuff, but it is a bit mentally taxing to make YouTube videos every day, which is why these have gotten significantly shorter. But anyways, I think that's just going to be it for this video. And tomorrow I will be releasing a video on Monday's price action. I will be making that tomorrow because it's a Fed day and I don't trade Fed days. So that's it.